So here we are at the beginning of another new year, looking back at the year just gone past and looking forward to the new year. For us as lawyers at Templars, what has 2022 been like for Ross? Starting with myself and looking at the sectors where I tend to work a lot. In the oil and gas space, 2022 was largely characterized by divestments by international oil companies in Nigeria, most of them as asset owners. And the divestments we saw begin were mostly driven by a movement away from onshore assets into the deep offshore. We also saw global re-strategizing towards cleaner energy. And that essentially led to some announced divestments, such as the Shell program, the Total program, the ExxonMobil program. Now, we've seen some of those transactions stalled for a number of reasons. We've seen litigation, we've seen inter-parties disputes, and that was 2022. We also saw a lot of noise in the clean energy space. At my desk, I saw a lot of potential funds looking to fund or finance clean energy projects in Nigeria. What was it like for you, Zelda and Sheso?
So I think, for the longest time, there's always been talk about, Nigeria being a real African leader in terms of, the market and a lot of things. And I think that in 2022, we definitely saw a lot of players positioning themselves more for a wider African play. So I'm thinking about sort of two matters in particular. The first, which is hugely significant, even though it didn't start in 2022, is the Lekki Port project, right? So it completed construction in October 2022. This is a 1.5, circa $1.5 billion project, and it's an absolute game changer. It's going to ease congestion, and it's really going to be able to position a port in Nigeria for transshipment, right, within the whole of Africa. So they'll be handling cargoes coming into Africa. Because let's not forget, this is actually going to be the largest deep sea port in West Africa, right there on the coast. So that's an absolute game changer of a project, which was completed in 2022, not to talk of the job creation there as well. The other one I'm thinking about was that, and it's interesting because it was more of a financing, but it was a financing for infrastructural purposes. So we had the Lagos Free Zone issue a 25 billion naira 20-year corporate fixed rate bond, right? And that's significant for many reasons. One, the size. Two, the fact that it's the longest tenor for a bond issued by a corporate in the Nigerian market. And three, the fact that it's also been positioned as an infrastructure bond. So what's this telling us? I think if you look at it critically, it's a testament actually to the capacity of the Nigerian debt market to be a real source of domestic capital for infrastructural development. And what I would expect is that we'll see a lot more of that in 2023.
And I'm assuming that this was a program, therefore, you're able to build on the
Absolutely.
back of that.
Absolutely. It was a program. So we're going to see more issuances under that program.
And Sheso, what was 2022 like for you in terms of big transactions, significant matters that you looked at in 2022?
Well, one of the major drivers of activity for me in 2022 was the Petroleum Industry Act. So even though it wasn't enacted in 2022, 2022 saw operators trying to implement the provisions of the Petroleum Industry Act. So the I guess extreme change from the Petroleum Act that existed since 1959 caused quite a lot of scrambling around, trying to meet up with deadlines that are created by that law. Implementation in relation to transitioning, in relation to conversion, whether or not to convert, whether or not there's even an advantage therein for operators, and regulators new and old, trying to figure out how to make transition seamless and advantageous for current operators. And operators also considering the fiscal side of things. There are quite a bit of requirements under the Petroleum Industry Act, which might affect investments that were made before. One example that caused us quite a bit of work and have to think outside the box was the segregation requirement. The requirement to now segregate companies across streams under the Petroleum Industry Act, which of course affects midstream investments that operators had made, and those benefits that those investments used to have on cost consolidation with upstream assets, which of course has to change now to an extent under the Petroleum Industry Act. So of course that kept us quite busy. One of the things we're also seeing is, we're still living under the new changes that are birthed under the Finance Acts. So, as you know, the government has released a new Finance Act every year since 2020, bringing in new changes. One of the most significant of which was the digital service taxation in Nigeria. So, operators in that space, mainly tech multinationals, payment multinationals, we saw ourselves, having to work with them to build new structures in place to align with the new provisions of the legislation. One of the major, I guess, changes that affects, financings and other things was also the capital gains tax changes. Before now, it used to be that shares as a security were not subject to capital gain taxes for disposals, but that has changed now, which of course affects, the way people are structuring their businesses. And a similar provision under the Petroleum Industry Act as well that has companies not being able to deduct finance costs any longer has us, in addition to transitioning into the PIA, also examining how exactly business structure and investments is actually going to be run in that space, different from what used to exist.
It's interesting how we keep coming back to the oil and gas sector. And it's not surprising, I guess, given the importance of the oil and gas sector to the Nigerian economy. When I spoke earlier about international oil companies exiting Nigeria, there was also the significant transaction that showed the national oil company, NNPC, becoming more assertive. And I saw on one particular transaction that I've been working on where we're represented Sinopec and ADAX, the Chinese oil company and its Nigerian subsidiaries, where they're exiting a production sharing contract relationship with NNPC. And we're seeing the NNPC becoming more assertive, looking to acquire a lot more in terms of production capacity and assets, and potentially play a big role in the marketplace, potentially comparable to other national oil companies that have corporatized in the past. So that's one thing that I saw happening in 2022, and who knows how that's going to pan out in 2023. But I guess we've spoken enough about the year past, and we should just begin to talk about 2023. Where do we see the year going? I mean, clearly it's an election year in Nigeria. Come February, Nigerians are going to vote, new government at the federal level, National Assembly, and all of the states. And I guess the question that is on everybody's minds is, what would this mean for the Nigerian economy? What would this mean for law firms? What would this mean for businesses? Now, layered over that also would be global forces. We're looking at a lot of predictions of potential global recession. The war in Ukraine is there. Europe's dependency on Russia for the supply of gas, and energy security moves by Europe and others in the West. So it's really going to be an interesting year in terms of how all of these factors impact upon Nigeria. In my little corner, I'm seeing transactions continuing regardless of the fact that we have elections looming. And I wonder whether your experience has been different, Zelda.
Yeah. So it's interesting, right? Because in every election cycle, we do get discussions around nervousness, right? But that actually doesn't track with our experience in the market. So what we tend to see is that we have three buckets of investors and business people. We have the first group who they've been in Nigeria for decades. They're very comfortable with the market. They understand how to navigate it, but they're not worried about the elections because they've seen the democratic cycle work in Nigeria. So they understand that come rain or shine, they're going to have their elections. There's going to be a democratic handover, and I continue my business, albeit with a new administration. And so that group will always be comfortable, and that's the group that we continue to see traction from with transactions and projects. Then you have another group who they're not necessarily as familiar or even comfortable with the Nigerian market, but they've been watching. They've been watching the political landscape, they've been watching the economy, and they also have some confidence in that democratic process. So they know it's not going to be interrupted. They know that private, business will continue, even the projects with governments will continue, and so they're willing to dip their feet. So we still see work coming from them as well. You then have a group that in our experience, are actually now becoming in the minority. And those are the investors and businesses that have no familiarity with the Nigerian market. And so they haven't attained that level of comfort. And so that's the group that is, we'll wait and see. Or wait and see who the new administration is, or wait and see what the new policies are, But in our experience, they tend to be in the minority. We tend to see that transactions keep ticking along. A slight slowdown around the actual voting dates, but generally, transactions keep moving.
I mean, that sounds very optimistic and very reassuring for us as lawyers and as a firm that is very busy doing these various transactions.